it's a constant progress to make it happen. So that's where I'm at. And then separately, I'll have to do a call with you as well to go over other details. I haven't got to do it yet. So yeah.
Sure, absolutely. Anytime we'll get on a call. So that's good. You're aware of what you're working on. You've zoomed out, looking at a 30-minute, trying to get more precision. And, a lot of times it comes down to being less triggered. So removing the triggers from your environment, from your screen. If you find that a small time frame is having you overtrade, then that's what you want to remove. The smaller time frame goes to something bigger. That's one of those easy fixes. Just remove the trigger from your environment, and suddenly overtrading becomes a lot less.
Right.
The funny thing is, profitability is just a lot of times for a lot of people, it's just a matter of taking less trades. Don't have to change anything else. Just taking less. So tightening up your setup, your rule book, just a tiny tweak sometimes, and suddenly everything changes.
Yes.
So, yeah. So yeah, whenever you're ready, though, we can get on a call. No problem. We'll talk about it. Go through the details.
Perfect. Yeah. Thank you.
Sure, man. Sure. All right. Welcome, guys. Irfan, D, Nasser. Usual crowd.
Hey.
Yeah, can hear you. Good. Let me get a screen up here.
How'd you over there? I was supposed to be in UAE, but
yeah,
canceled, and it was a shit show. I was in Pakistan, and I was supposed to be there for a week. Now I'm back in Canada. It took almost 3 days to get here because there was no flights. Buy a new ticket and reroute my flights and whatnot.
Well, you made it. You're in a safe place. All good. So I can't complain too much, I guess.
Yeah.
All good. I was supposed to be in Thailand right now. Had a whole vacation thing planned while the kids had time off from school, but flights got canceled, and decided not to book another one. Not yet, at least.
Right.
So
right.
all good, and get to stay here and trade and make money. So why not? But yes, the world is full of surprises, huh? Life is full of surprises.
It is.
Fun. Well, how'd y'all do with trading today? How's it been going? Anyone have fun yet? Anything exciting to talk about?
Not really. Not on my end.
No, not you. Nobody. Was there something in the news today? I think someone was mentioning it yesterday. FOMC today is that it? Is that what it is? So I'm totally out of the loop on this. Does anyone know? The economic news release. If you do know, let us know.
It is FOMC, right? At 2.
It's at 2. Okay, so in a couple of hours.
Yeah.
Okay. Yeah. It's so funny. I don't even pay attention to these things anymore. Well, all right. So what we've had is, this is the MES contract I'm looking at. Basically, the S&P 500. It hit yesterday's high overnight. It's been crashing since then. A bit of a pullback, break down and go again. Oof, fun times. You know what's interesting? You've got this whole zone here from yesterday, which is basically support. You can see it bounced off twice. When it came right back into it, take a closer look. That's support. But it came right back in, consolidation, breakdown through it, retest. Look at that. Retest of the breakdown happened right there at about 8:40 in the morning. And sure enough, that's your short for the day. You'll be done before the market opens. Yeah. So it's funny. I was looking at it. When was I looking at it? I think I was looking at it up here. Yeah, up in this zone. I didn't get into it. But if you look at it here as well, further up, I had this level from, this is yesterday's high. Overnight, it got there, and look what happened. Very simple. It got choppy, put in a consolidation. And this is my favorite trade book. Look for a consolidation at a key area, and then look for a breakout, long or short, either way. And this consolidation, it put in these lower highs, and then the breakout happened here around 7:30 and then pull back and retest the bottom of that consolidation area, right about there, around 745-ish. That's the entry, really, at a key level. Man, it's funny. I was watching it in this area, and then I stopped watching it. I went out and started looking at other things, and this thing would have been a monster. And there's your add opportunity as well, around 845. So very good activity overnight. Since the market's opened, yikes. This doesn't look like fun at all. Hope you guys didn't get into too much trouble. Oh boy. Dennis, oil futures? Yeah, sure. I got a couple of trades in earlier today on oil and gold. Both of them worked very nicely. Got the screenshots. I gotta bring them out and share them with you. This is oil. Oil was a real party, wasn't it? Look at this. What a ripper. All right, zoom back out. So we've had the support from the recent couple of days ago. You got the first breakdown. As it broke upward, you may have had an opportunity to get long here if you have an eye for such things. So again, this is another one that I like to talk about. Something I look for is don't try and catch the reversal. Wait for the continuation of the reversal. So the reversal may have happened here. If you try to catch it here, you get stuck. Over here, you get stuck. Over here, you get stuck. Over here, maybe, but you'd be so lucky to get it. You'd be stopped out so many times before you get it. So I don't want to get involved in any of this reversal stuff. What I like to do is wait for the reversal to actually happen, which began happening here. Then you look to the left and you find the most recent resistance, which happened here. And you can look at the zone. Zoom in again. Right at that previous resistance, you can see where price was going up, and then it's a consolidation. It goes up, it goes sideways. You have one red candle, indecision candle, and then you have the hammer with room to the left inside of the consolidation. Naked Trading will tell you in the new high you go long. You can read the candlesticks and the footprint charts, and there's a long, I'd say, probably in this area and another one in this area. And so that was interesting. I wasn't watching. Was I watching? I got the long from. Actually, I think I got this. Yeah, I got long from here. I got to look at the old screenshot. Took it a few hours ago. I got long here and I took it off near the level up there. So that was a long trade. It was a good one. And what else then? It got through, pullback, hit the next level, consolidation again before the next breakout again. Very simple trading where you don't look to catch absolute reversals or go for catching absolute breakouts. Wait for it. So again, you see the consolidation happening at a key level. So it's an area you watch it. And you can put down, let's use a little line here, make it easy. Where is it? Right about there. You can see that's the resistance. And the breakout happens as the price goes up through that line, right? And it gave you a couple of times where it started bouncing off of previous resistance. There you go, right there. 843 and then again 844. So you have a couple of minutes of opportunities to identify the retest of the breakout. And yeah, even a couple of pullbacks. And it looks like it went from there, did it? Yeah. I don't know what levels are up there, but I can find some. So I think setups have been good. Again, this is overnight activity. Since the market opened, since the New York opened, take a look at this. I mean, this is what you guys have been looking at since 9:30. There's no way you want to be involved in this. Nothing at all. There's no setup. There's no trend. There's probably a level somewhere. Maybe you're looking at a short up here and you'd still be waiting on it. I don't know. But then you have a level down here, so RVR could be a problem. But I don't know, Dennis, did you get involved in this? You looking at this? Not something that looks interesting to me. I got the long from down here to up here, and then should have held on, right? But I mean, that was my target, and so that was the end of it. After that, again, I did not look at it, but you can obviously see there's another entry there. That would have been a fun one.
Avi, can you go back to the previous chart, the E-mini you were looking at? I just have a question about when it dropped.
Yeah.
So when you said, it was a spot to add further, it was up there and it dropped there. What there told you add more?
Over here, let's zoom into this. So what you're looking at is
After it broke that
Yeah.
level, and it came back up.
Yep. So
Right.
let's look at this. Let's bring the level here. So this is basically recent support. We got it there. The price came from up to down. It firm downtrend, easy to identify. And as it approached that support zone, you can see it did a consolidation, right? And that big level is just a simple area. You know this is a support area, but then you look at local price action, and you can see that is the support right there. Very, very local, right? Real time. And so you know that this is basically a support zone. It's been support. Now it's been consolidating here for a little while, right? And zoom in a bit. Yeah, consolidating. Then it did the breakout, and then it did a near perfect retest right there.
Right.
So you know, if you are able to identify the entry somewhere within these 2 or 3 candles here, your stop's right above it, and off you go. You're in this game, right? Just getting into the lows here would be 4R, maybe 5R if you get your entry right. Something like that. And then, yeah, still going. So it's very simple price pattern stuff. I'm not even looking at the footprint charts yet. This is very just simple stuff. Where it goes in one direction, it relaxes, then it breaks out, catch the retest. Because, you know, breakouts can get tricky. You don't want to catch it. If you look at, let's zoom back a little bit. And this is one of the reasons I don't like catching breakouts. So if you look at this activity here, you're thinking, okay, it went long, it's consolidating. And you're waiting for a breakout up or down, right? Mm-hmm. And so let's put the line here, about here someplace, right? Can't even draw these lines properly. Oh, come on. All right, so let's put the line here. That's the support. So if it breaks down from there, you're thinking that's a short. So you're watching it, and there you go. This candle breaks out. You get short here, you get stopped out. The next one, breakout here, you may get excited. Okay. And yeah, it would have worked, it seems like, but really, I would wait for the retest. Let it come back up. Retest this area, and in this zone I start reading the footprint chart and seeing if there's an entry with a stop right above it someplace, and then you're in it. So rather than trying to catch breakouts, catch retests of breakouts. So in this case, if you just try to catch breakouts, you'd have one stop and then one would have worked. And even with these, you got to realize generally you got to have wider stops with entering breakouts. With retests, firstly, they're more reliable. Secondly, stops can be tighter. So all that adds up to a better RVR and a better win rate.
What's the time frame on that chart there, Robbie?
Time frame. What's the time frame? Anyone know what's the time frame on a 1,000 tick chart? Because I have no clue.
Oh, really? Okay. I'm like, what the hell? How long is this? Is this days? Is this months?
And if you look at this consolidation, see, this is at 2:30 a.m. The consolidation began, and the breakout happened at 7:30 a.m. approximately, 5 hours.
Oh, I see.
But this is a 1,000 tick chart. It's not a time chart. So the candles only close when there are 1,000 transactions. Irrelevant of how long that takes.
Okay.
See, so 1,000 T is a tick chart.
A whole different way to look at it.
Yeah. So we're moving on into the 5th dimension now, right? Beyond the dimension of time. That's how. No more time.
We're in the matrix.
Oh, yes, we are. Very good. So, I mean, you guys really, you know, if you don't want to look at transactions and order flow and footprint charts or the tape or book map or level 2, any of that stuff, you don't need to. You saw me trade like this for a long time. Just look at price patterns, consolidation, breakout, retest. I mean, it doesn't get easier than that. You have another one here, consolidation, breakout, retest. I can show you this stuff all day. You know, even here, I think you may have seen it. Here you get a breakout. No, it didn't do a retest on this case. Just went, but you get it the other way. So, you know, it's easy enough. You don't need to do much more than that. I've just gone into the footprint charts in the last month or so because I'm attempting to get tighter entries for my trades so I can get better RVR. And you know what? I'm thoroughly impressed with it. It's pretty freaking cool. So, but again, not necessary if you're not up for it, if you're not into it, if you don't want to learn how to read that stuff, you know, you don't have to do it. Don't have to take the couple of weeks it takes. This is easy enough. Let's just make it trading. Put levels on the charts, wait for it to get there, and wait for a pattern. And if you're really confused about patterns, I'll tell you the easiest pattern, the simplest one is this right here. Consolidation leading to a breakout, and then catch the retest. There's nothing else you ever need to think about. I mean, it's so easy, and you get enough of them on whatever ticker you're looking at. Even one ticker, you'll be fine. Look at us down here. You had a consolidation, breakout, retest. We were talking about this one yesterday. Right? I feel like I see them everywhere. So, easy stuff. You don't have to do too much. Just identify the consolidation part.
Hey, Avi, can I ask a question here?
Yeah, for sure.
As you go to MCL, for instance, this is a similar story actually happening here right now, because we've had a consolidation right up there, and then breakdown, retest, and then dropping down. Is that how you see it as well? And if yes, where would you expect the target to be?
So if you look at this area, this looks like a consolidation area to me. It's been going down, consolidation, breakout, and the retest may be happening now. So if you're able to identify the retest, well, for a retest, you need specific criteria. I used to use a 1-minute chart, have a bearish candle, then the new low, and all that stuff. You can do all that. And so once you identify that, then, and firstly, also, I want this consolidation to happen at a key area. I want the zone to be important. So looking to the left, I don't see a lot going on here. I mean, I would put a level, let's move this up here. I'd put a level probably up here, I'd say. Yeah, these keep jumping around. What the hell? All right, right there. You can see that one. Resistance, false breakout resistance, and down. So this consolidation we're getting into right now, it's kind of like on the way, right? It's not something I'd be too excited about. But with my level up here, then I'd be interested in this one. If we move this triangle or rectangle. How do you move these things? Man, these charts are so confusing. I would put it here.
Yeah.
Right.
Yeah.
Yeah. And this is the obvious support zone. That's the absolute high of it. And here you go. Here's your breakout. Here's your resistance retest. And you're on your way. And then my targets are always just levels, whatever. So in this case, I've got a level here. From where did I get this? I think this was, does anyone remember where this level came from? You see it was resistance here. Yeah, from right here, consolidated. You can see it took off directly from this level to the next. That's interesting. So buyers were right here, going straight up. You can see that. That's a pretty obvious one. Yeah, it was pretty much resistance yesterday as well. Interesting zone. Earlier today, you can see where it got up there, consolidation, and go up. So yeah, if I'm able to catch the entry somewhere in the zone with the stop above it, that's the target. Of course, I want it to be a minimum of 5R, otherwise I won't take it.
Okay. At the moment, it's not 5R, it's actually less than 3.
Well, it depends where your stop is, right? Depends where your entry, your stop, all that matters.
Yeah, of course, yes.
So that's the reason I'm going into the footprint charts, because I really like the entries, man. I've been able to get tremendous entries. I'll share the screenshots with you all after I finish this, but I put in I think it was gold earlier today, where I put in a limit order to enter the position. It was up here where we had this consolidation, breakout, and retest. I think it was in here where I got involved. I can't remember. And so the way I set it up was, if the price goes up, it'll fill me into that short position, and it'll put a stop loss, which equated to $200 risk. And then I put the target somewhere down. I think it was this. I had a level here earlier. These charts are all a mess right now. Where basically, if it hit the target, it would be $4,700 realized. And that's exactly what happened. I put it on, I left it alone, didn't look at it for a couple of hours. And when I opened it up later, it had failed me. It went in my favor, and it was almost halfway to the target. It had gone through a lot of support areas as well, so I moved the stop to break even right there, just did it on the phone. And then a couple hours later, a little while later, it slammed into the target, and that was it. So you can see the RVR in that. I don't even know what it is. Can someone do the math? When you risk $200 and you make $4,700 on a single trade, that's really something. It's more than 10 hours. So that's how I'm trying to do it. Really, that's how I'm trying to do it. And today I got one good example of it, where also I didn't sit there and chase the price and just jump in and all that, because the price wasn't where I wanted it to be. It had already gone. But the setup, everything had happened, the footprint charts, the levels, the consolidation, the breakout, the retest, everything I like to look for, already gone. Doesn't mean I go and chase it. I just put the limit order in. So if it comes back and retests that seller that I'm really looking at on the footprint chart, then I want to get in on it. And it sure enough, it did that. And I promise you, I'm not sitting here for 3 hours waiting for that to happen. I'll go nuts if I do that. So just leave it. Anyways, I'll share that with you all in the
Sorry, Avi, what is the best teller for you that it's not a false breakout?
let it retest. So here, like this is an interesting one. We have it on the screen. If you're looking at this whole zone as a consolidation, then you can see right here, it's a false breakout. Now, I don't know it's a false breakout until it goes back inside, right? I have no clue. This one happened to be a genuine breakout with a genuine retest. Now, the only time I know it's a genuine breakout and it's breaking out of that area and going off to the next one, most likely going off to the next one, is after the retest, right here, where all these buyers who were causing the support down here have been overwhelmed, and now the sellers are in charge. It's in this area where I really know. Let's see if we can get the footprint information here and see what we have. So you can see this was all support, lots of sellers here, but unable to go down, pushed upwards. But then it broke down, right? And this you can see right here on this candle. See this red bar here? This is a tremendous amount of sellers, aggressive sellers, people hitting the market order button to enter short positions. That's what's happening here. And so you can see that's when it got below what was the previous support, right there. And then sure enough, it pushed down quickly straight away. So there you go. You have your conviction. This is beginning to look like a good breakout. Sure enough, it goes down, finds support down here, comes back up, right back to the breakout area. This is the interesting part. Again, remember, these are the sellers that made that initial breakout happen. You want to see if these guys are still in the game. So it pushes up through them. Over here, they're getting overwhelmed. And zoom in further. You can see right above them here, all this green stuff. These are buyers, aggressive buyers, hitting market orders to buy. And they're buying, and they're buying, but they're unable to push upwards. You can see the volume is quite high here. These are large bars, right? So lots of aggressive buyers, market buyers. As it turns out, they're unable to go higher. And this is because, well, on the level 2, there's a big stack of sell orders just sitting here. So they were absorbing it. You don't need all those details, but basically, if they're buying it and they're unable to go up, okay. And you know they're not going up and it's going to go down. Then I'm waiting for my main sellers, which I saw here, waiting for them to get back in the game. And truly, they were there, and looks like they showed up heavier down here, further lower. Now, that's a lot of conviction. So first you have that big support, breakdown, you have the big volume here, and it comes back up. The buyers tried, right? And if these buyers succeeded, it would have gotten back in, and that's it. It's a false breakout. But in this case, they were not able to succeed, and my sellers came back in later, lower even. That's very convincing. So you have sellers here, and then lower after testing the buyers, after giving the buyers an opportunity to get into the game. They failed. Now you're in this thing, and off you go.
Where is a good stop then from that point in your mind?
So right here is the sellers that I'm interested in, or rather, finally I get the confirmation to enter. So let's say you take the entry right here, short. The stop, I would probably go here. There's a safe way to do it where you're thinking, all right, if these buyers get another opportunity, then they go up, I don't want to be a part of it. That's one way to think about it. The other way to think about it is to go with your major sellers. So this is the most recent, biggest confirmation sellers. Give yourself a bit of room. You don't want to just put a stop right above it. Look to the left again. That's the main one that you had. You can put the stop right above them. Or maybe you have another area. You might want to just be a little safer. Put it right there. So you can see how tight that entry and stop is. And then, the risk to reward thing is just enormous, right? It just goes. So, that whole entry was, we were talking was in this area, within this candle. And just
without the footprint chart, though, without the footprint, would you have thought the same?
Probably not, no. Without footprints, I'd be looking at a time chart, most likely, and I would be just waiting for a candlestick to close. And you know what? Let's do that. Let's do this exercise. Let's see. Let's look at a time chart. And we got 30-minute. We don't need footprints. Candlestick. Okay. Yeah. So we're up in this area. So 30-minute. Let's go into the 1 minute and see what we can find. Is this it? No, wait. This is. Look, I'm looking at something different. Anyways, all right. Here we go. So yeah, you have the support. You have the breakdown. You're waiting for the retest, right? In this case, the 1 minute chart, here's my entry. Because here's your breakout. The retest happens. It tests the breakout zone, puts in the first genuinely bearish candle here, this one. This is where you got the bearish wick. It's basically a good solid reverse hammer, absolute bearish activity, hardly anything on the buying side. Then the entry for me is the new low. The next 1 minute candle makes a new low. So right there would be the entry. Stop above that 1 minute candle. So be up here. And then you're in this case, it was a good solid move. So you're still getting 5R or 4R or something. But with that footprint entry, it became a lot bigger, right? Because the entry is, stop is all within the candle. It's like, very minute. And when you can do that, and you have the confidence that when it works, it's 10R on average, you don't mind taking 4 stabs at it, stopping out and trying again. So, now really good stuff. Good way to go.
Very cool.
Yeah. So at least that's the way I'm doing footprints. So today I got that one. Well, it was earlier on on gold. It was up here, and then I took oil as well. So what were we looking at? That was a different chart. This was oil that we got this one. What we just looked at on the time chart is the oil chart. We're looking at gold chart on this side. So 2 different things, but anyways, you get the strategy. So fun stuff.
Hi, Avi. Good afternoon.
Good afternoon. How you doing today?
Good, thank you. I was wondering if you can look at the MES from 11 a.m. till about now. Do you see this as a consolidation or accumulation, or do you think this is more of a distribution pattern for the last hour and a half?
This is known as a graveyard pattern. You're being buried right here. This is a graveyard for all traders.
Mm-hmm.
I don't understand the words distribution, accumulation. I never use them. To me, it's either there's room to the left or there isn't, right? And here there's no room. It's just stuck. When it first got down here, obviously there was room to the left when it was, look at it, about here around 10:30 or so. It got here and you're thinking there's room to the left. If you get a pattern, you can look at it, but it's been a choppy mess, right? And I don't know. I don't have a level that I have that one earlier. And it just looks like a disaster. I don't count this as the big players are trying to buy or sell or something. It's just the move's done for now. And I like to think of it in more human terms. When you have a real tough sprint, you go, they need to rest. This thing had its sprint and now it's just kind of resting. Wait for it to catch its breath again and go again.
Okay.
So, yeah, this doesn't look like a lot of fun at the moment, or so far today at all.
Right, because I'm in the short, and I was wondering if it's time to close it, or.
Well, depends on your strategy. I mean, I'm looking at this as a great big mess, but there's plenty of people who will make money on a short like this within a 10 minutes time frame or something, right? So, I mean, if that's your situation, or if you're short here and your stops up here, you're sitting through the what did you call it, accumulation, and then drop from there. I don't know. I was
short since yesterday, so and actually this morning at the I think actually it was yesterday. Short yesterday.
Short since yesterday. Okay.
So I don't know if I should close it right now, or if there's more downside to this. I can't tell.
Well, that's the thing. When you enter, right, you have an idea about the setup and why you should enter. At the same time, you should know what the target is, at least approximation, and you have a reason for that. It sounds like you're in a swing trade you're holding for a couple of days. In that situation, we're holding overnight. Then you really got to look at various other kinds of risks, not just price action. You got to look at the news and volatility, and looks like we have FOMC coming out soon, about an hour and a half. We are going to be. So you have to calculate all those sorts of things if you're going to swing trade, if you're going to hold through that overnight risk.
Yeah.
And then make your decision based on that. And a lot of times those fundamentals will make, you have to decide based on that, and irrelevant of the price. This is where you have to exit or have to enter or whatever.
Okay.
That's a swing trading thing. So with the FOMC coming though, I mean, I would suggest, don't risk it. It could go 10 times further from here. It could crash the whole market. I don't know. Or it could go back up the other way, or it could be nothing.
Right.
It's an absolute guess.
You're right.
So with that
My
in mind, no.
I'm sorry, I was thinking this close to 6,700, but the low today was, I mean, it was pretty close. It was I think 67.18 or something like that. I think I was targeting closer to the 6,700. It didn't get there, so I haven't closed it yet. That's
Well, one thing you could do is you could put a stop in place where your stop's at break even. Looks like you were in yesterday, so put that break even, and then sit through the FOMC stuff. And if you survive, then reevaluate, because your price might be down here, way lower than you initially thought after it's all over.
right.
No, and then you made 10 times more money, and then you won't be cursing me later. So.
Oh no, I wouldn't either. I was thinking longer term. I was thinking like 6,600 or 6,500, something around there. But I was thinking today. I mean, it could get there, in one day. But yeah, I wanted to protect what's gained so far. So I think I'm just gonna take your advice and or hedge it with a call.
Oh boy, that's too complicated for me. Hedging
What?
it. Yeah, there's ways to do it. Hedging it makes sense. Yeah, makes sense. As you're getting into this FOMC stuff, at least your risk will be defined, and you don't have to close the positions. Hedging is a good idea. Actually, that's a good idea for this longer term trading stuff, swing trading and all. Hedging makes a lot of sense. So take a look. But now you have an hour and a half or so to hedge it. So maybe 0 DT makes sense.
Yeah.
Yeah, you may want to, as long as the price stays approximately where it is, you could hedge it. Go slightly out of the money, 0 DT call. So yeah, I might do something like that. I've never done that, but it's something I might do. It's again, it's a different kind of trading completely. Not something I usually do.
Well, thank you. I appreciate your advice. Thank you.
No worries. Be safe out there, guys. There's a lot of, as we know, excessive volatility these days, and today's FOMC stuff. So please be careful. Keep an eye on things. Personally, I gotta say, trading in the Europe session, London session, these last 2 weeks has been a lot more fun than trading the New York session. I've been here watching this thing, most of New York, other than the open, not much fun. Not a lot of setups, not a lot of good moves. But again, using futures contracts, basically overnight in the US, it's a whole lot of fun. So, anyways, that's my experience.
Avi, just a quick question. I was trying to bring up the volume footprints the way that you've done this, but it doesn't look like this.
Yeah.
Is there
I'm just seeing your question now, about the footprint charts. You got to buy one of those premium subscriptions. Does anyone know what it is? Ultimate or premium or whatever? I've got the tick footprint charts. So I've got whatever's the highest level of subscription they've got.
Yeah.
At TradingView. I bought that so I could get the tick charts with the footprint charts. I believe one tier lower, you get footprint charts, but not the tick charts.
Well, apart from the tick charts, but the volume footprint itself doesn't look like the same way as you.
Okay. Do you want it to look just like mine?
Well, yeah. Well, basically, to be able to see the buyers and sellers.
Yeah.
All
right. Here are the settings that I've got. If you want to compare your settings and see what they look like.
Settings.
So,
just
I mean, I've adjusted again. I adjusted it yesterday. I put on Delta here instead of ladder or something.
I see. All right.
These are the primary settings. Yeah, that's basically all the settings right there. For now, I'm happy with this one, with this way.
Okay, I'll try to make it similar, actually. So that's a value area. POC is unticked. Okay, let me take a snapshot of that, do it on my own time. That makes it easier.
And watch, when you come back tomorrow, I'll have it different.
I'll ask you the question again.
All right.
Thank you. Okay.
No worries. So what's interesting here is this one, value area and POC. These are two settings that seem to be very popular with footprint charts. Everyone seems to like them. For me, it was just too much noise. I removed it completely. And I like the imbalance. I like to see that. It's not the most important thing, but it's there. And what else do I like? Yeah, delta. I was playing with these settings a bit. Delta makes sense. It's just easy to read. And that's it, really. I haven't done much with it. Not much so far.
Still doesn't look the same.
I changed the colors, man. You gotta change the colors.
No, it's not about the color. It's just I have,
Manual here. Look at this row size.
that's manual, yeah.
And
that's
split
two
profile.
per row. It's like made one, right? Profile, delta. That's all I have. And apply, and then volume areas unticked, POC unticked, show summary unticked, highlighting yes, and it's exactly identical. That's
Up here, anything with the candles, this shouldn't be a big deal.
Oh, now it's okay. Now it's for some reason, I did something that it worked.
You hit the apply button. Hit apply and then okay.
Maybe apply, yeah. All right, brilliant. Thank you.
All right, no worries. Cool. Yeah. So with these charts, what I've discovered at least late last week and moving into this week, the trades I've been able to take, finally getting to that goal that I've got in mind, which is try to average out about 10 R on these trades between winners, losers, and everything. So average out about 10 R. So these last few trading days have been pretty good. I've been in that range quite regularly. So once I really get the confidence that this is, I'm getting what I want out of it, then the sizing comes in. Let's finally get back to regular sizing. Hopefully soon. And I gotta say, man, these footprint charts are a whole lot of fun. But also you gotta realize even with the good entries, you still want to get 20 R, 15 R trades like that. It still takes time. You cannot have that pathetic, petty day trading mindset where, oh, it goes in my favor, let me take a partial. There is no such thing as partial. You let it run. Either it stops you out or it goes in your favor. There's only two possibilities right after you enter. If it stops you out, okay, great. Look at it again. If it's still there, if the setup's there again, take it again. Now, if it goes in your favor, you can watch it a bit, let it go through the next area of resistance or support, and then bring your stop into break even. De-risk the position. Now you have nothing to lose and everything to gain. And let it just run for that target. Either it'll get there or it won't, or it'll stop you at break even, or the day will end and you'll take whatever's there, whatever profit is in there. And that's it. But to be able to do all this, firstly, you gotta be willing to have this open position for a long time, many hours. And also, like I was saying, that petty day trading mindset, you gotta not be so greedy to put it in your pocket, which in the end is actually not greed. It's more scarcity. It's the scarcity mindset. You see a little bit of green in the P&L and you want to take it. And you're never gonna get far with that, I tell you. So really just let it go for your target. But again, it's very uncomfortable for most people to see that it's, you put down $100 risk and the thing is sitting at $1,500. It's only halfway to your target and you're still not touching it. You're just leaving it to run. Most people struggle with that. But I can tell you that's where the big money's made. That's where risk to reward comes in. You do that regularly. It's amazing. You just got to detach yourself from that day trading mindset. This is not day trading as the way day trading's been popularized. This is something else completely. So mindset, I think, is the biggest challenge from all this stuff I've done in the last few months. The mindset shift has been the biggest challenge. To move away from all that options trading, zero DTE, and you got to really manage that position, trail it, and take it off, de-risk it aggressively, all those sorts of things. Just release from all that stuff and take full advantage of the futures market, which is time is in your favor, leverage is in your favor tremendously. So you don't need a large account to get into a huge position. Of course, that works both ways. Make sure you have a stop in place. And you don't have time decay, of course. So then, again, time is in your favor. The market's open for many more hours, 23 hours, and there's so many things to take advantage of. And so far, I'm loving it. It's so much easier than options trading. So much easier. And of course, liquidity is not a problem that I know of. So think about these things. If you want to trade the way I'm trying to trade these days, these are the real challenges. It's not so much the footprints and the technical stuff. Again, it's in your head. It's in your abundance mindset or your scarcity mindset, whatever's going on in your head. You have to address that and then step up. So think about those sorts of things. Now, where did silver go today? I did not look at silver. Wow, fun, huh? Big drop. I like looking at silver usually, but today I did not. Also, let's see, there was support down here. Yesterday's low, effectively. Let's see. Oh, there you go. Look at this on silver again. Just using yesterday's low overnight, it did a false breakout. So just what we were talking about earlier, don't enter the breakout. Wait for the retest. So this would have been, if you entered, you'd be stopped out. Then a breakout happened later. Rejected a few times. And there you go. Went some distance and pulled up. And in this zone, if you're able to identify the retest of this area, you have the opportunity. You would have entered here perhaps an hour ago, 2 hours ago. And so let's say, just looking at candlesticks, let's say entry was halfway down this red candle. It stops above the red candle. It went, what, 1 hour in your favor, perhaps 1.5? It's gone nowhere, really. So you just still leave it. You still have the risk on and you leave it. It could easily keep running. It could not, whatever, depending on the setup. That's how I'm reading these things. And again, when your runners, your winners are in the 10R or average out 10R, taking these few stops are not a big deal. Say 3 or 4 of these, no big deal. Silver is the most leveraged thing I've ever come across. I'm fun.
Sorry, one last question. The fact that when you look to the left, when you where it dipped there to the left, no,
Yeah.
the one section there, does that not trigger something there saying that maybe it's not really that much of a break there?
You're talking about the support down here?
Yeah.
This is interesting. So the way I've got this, the level here, I just based on yesterday's low, but basically this whole area of support, you can see where it's been bouncing off, even up here in this area. So when you're seeing this consistently bouncing off one area, and then you have one dip down, call it, went right back in. This is a false breakout. This is where some people, I think Zach would call it, what do you call it? Trapped sellers. People are trying to sell and they have to stop out over here. So these sorts of false breakouts, I don't really bother with them. Even on this side, if you believe that this is resistance, this is a false breakout. And if the price gets back up here, does that consolidation, then you have a breakout and retest. I'll be interested to go long, and I'll just ignore the false breakout. Most of the time, it's not a big deal. Most of the time, you get something like this, it pulls back, makes a mess, and then it continues. No guarantees, of course. But if you look at every little up and down on the chart, you're going to go nuts. So, yeah, I don't bother with this stuff.
Thank you.
Yep. There's silver. And oh yeah, crypto. What happened with crypto today? Anyone? Anything? That's right down, huh? Yeah. Where's Sujit? I bet he's all over this. Hiding in Amsterdam trading crypto. Yeah. Wow. I had a good Bitcoin crypto trade last week. It was one of these bullish moves. I can't remember which one. Maybe it was here. I don't know. One of them. But it rarely gives you this in my experience. Hard to find a good one. Anyways, what else is on your minds, guys? Who knows how to trade through FOMC? Anyone? Anyone know? Anyone have an experience with that? No.
But I started to trade the futures for the first time a couple days ago through the funded account or the and it is so much easier to me now looking at it than options. It's now I understand what you're referring to when you're mentioning about trading futures versus options, the benefits. It is it's night and day. It's like where has it been, you know? I did not realize. I always thought it was more difficult to trade futures because the movement and the I guess the way that the ticks are, or the way it moves, and I can tell you it is so much easier to understand, and it's so much. I think it's just more intuitive to me to trade futures.
Awesome. Thanks for sharing.
Thank
Yeah,
you.
glad- You're welcome. Yeah, I'm glad it's working. I'm glad it's working for you. Good. Once you start realizing that, you can get better results with less effort, there's a word for that. It's called 80-20. So I'm glad you're figuring that out. That's great. Amazing. It's so much easier. So much easier. There's no need for any of the complexity, any of the nonsense, or anything that's truly being marketed out there, which is, again, it's truly just marketing. It's nothing to do about trading. So, but really, once you get to trading, you know what it is to deal with 0DTE options. You know what it is to deal with freaking Tesla at the open. You realize these few things. You realize there's so many easier ways to do it. And yeah, futures, I think, I agree with Jules. It's right where it is. Everything's in your favor. Everything's in your favor.
But we had to learn your options strategy first before we graduated to follow you into futures. So
Oh, gosh.
learning process.
Avi, it's funny. People usually go from futures to options, and you did it backwards.
Yeah, I tend to be rebellious like that. But yeah, whatever I'm doing is I'm just trying to evolve my trading, and you guys have seen that over the years. 3 years ago was very different than what it is today, and there's been probably 4 different phases in between. I only have one goal, really, is just to make my trading bigger, better, more efficient. That's it. So I'll do whatever I have to do to stick to those goals. It doesn't mean you have to follow me into options or futures or anything. I think it's important that you absorb, whatever makes sense to you, and then you try and work with it. And if it's working for you, great, do it. If it's not, then don't have to. So don't ever think you have to follow me into anything. I'll share whatever I discover, but it's just a matter of sharing, and I'll answer questions to the best of my ability. Really, that's my goal. It's really just to improve my own trading. And not everyone's in the same phase, or not everyone's even on the same path. So you gotta be aware of yourself, your own journey, your appetite for risk to reward. What trading is for you. Is it a full-time thing, or are you just trying to make a few extra bucks a month, or all those things? All of it comes into the picture. So just because I'm doing things a certain way, it may not mean that it's right for you. These are your own questions that you have to answer for yourself. Of course, happy to get on one-on-one calls at any time and discuss these things. Doing it all the time. Yeah, those are important things. And yeah, if anyone, I think I was saying this yesterday, if anyone comes to me now and asks me, hey, I want to learn how to trade, I'd bring them straight to the futures market. I'd introduce them to it right away without hesitation. Definitely none of that. Definitely no option stuff, because that's more complex. But most certainly none of that trading the open, Tesla, NVIDIA, searching for things on the move, or what do you call it? Tickers in play, all that junk. It's all junk, because that's where people blow up. If someone came to me, I'd bring them straight to the futures market. I'll firstly show them that it's a 23-hour market, really get the mind in the right place to begin with, where you don't have to jump into it. There's no such thing as FOMO, because the market's open longer than you're awake most on every day. So you really don't have to worry about it. And then there's that other myth that you have to have a lot of money to be able to trade. The truth is, no, you don't. You don't even have the PDT rule with futures. You don't need to have a minimum of $25,000. You can start with a $500 account if you want, really. And also no PDT and leverage is there. Again, figure out how to use leverage. I probably spend more time on that than anything else. You must learn to put in the stop and respect it. As in, put in the stop before you put on the trade even. And don't move it. Don't play with it. That's probably the biggest thing a newbie would need to learn. And then go with the futures. Footprint charts are quite simple, really. Figure out how to put levels on the chart and what does it look like when buyers are buying? What does it look like when sellers are selling? What does it look like when one party is taking over from the other party? And off you go. You have a setup, you have a way of trading, you have a style. You just go with that. It's not complicated. I could probably teach this in 30 minutes. Maybe I should make a video for newbies. This is how you really trade if you want to start. Maybe I will. But really, because of the simplicity and everything that it allows, all the freedoms in it, and it removes also a lot of the triggers that trigger people into blowups, which again, as we said, is trading the New York Open, looking for stocks and play, all that junk. And then of course options, people get excited. Options, lots of leverage. You get more leverage here. You just have to be careful with it. The options leverage goes against you because time is not in your favor. But the futures market time is in your favor. So you have all that. So yeah, that's what I would do. I wish someone told me this 8 years ago. Where were you guys, man? Where were you guys 8 years ago? What the hell? No one told me this. Let's go figure this out in 2026. I'm going to throw the keyboard out the window now. Anyways, all good. We're all here. We're all here together. All good fun. Yeah. So what else is this? So after we're done here, I'll share with you guys the screenshots of a couple of trades I took today. Both were amazing. Both were in, I don't know, the 20 or 30R category. Long oil and short gold. They just worked. And it didn't take any effort from my side. I probably looked at it for 5 minutes, looked at the charts, figured out that's the area to enter, that's the stop, that's the exit, and I put on the limit orders and left it. And I just looked at the phone later on while I was at the gym, and then I was at the beach, and I was like, oh, okay, it's working. Great. I'll share that stuff with you a little later after we're done here. That was fun. And that's the way I want to trade, really. I didn't get into trading to be stuck to the computer 8 hours a day looking at this, or 20 hours a day looking at this, drinking Red Bull all the time. That's not me. Also, I don't want to go there on the internet and start hustling. Oh, look, selling courses and all that. That's just hustling. I don't want any of that. I got into trading to have freedom. And freedom, I believe, is here. And the way I managed to get those trades in today, and very similar to how I've been able to do it in this last, let's say, call it a week or so. It's good. It's working. Where the effort is minimal, and then you set it and forget it, you can get on with life and do whatever is important to you. For me, that's spending time with my family and kids. So figure out what works for you. I really think it's amazing. It's tremendous. It's really tremendous. Missed out on this one, man. I should have put an order in right here. I believe I had this level here. Yeah, this would have been, I think I had this earlier, and I looked at it up here, but I didn't look at it. And this is yesterday's high on the MES. We talked about this a little while ago. Consolidation lead to the breakout and the retest and go. I mean, here's the fun part. I think I did this with gold today. So you see it like this, consolidation, and it broke out. What do you think? You're gonna enter here, put a stop there? No, I gotta get in. You're chasing it. No, forget it. If I see this picture and I don't want to sit here looking at it for another hour, what I could possibly do is identify this bottom right here. I put the limit order to enter short here, put the stop perhaps above this white line. Again, I'd be looking at the information here on the candlestick, find where those sellers truly are, just put the order to stop above it, and then the target down there. And it fill, survive it, and off you go. That's pretty much how I got into gold and oil today, both situations. Didn't do it over here on MES, and I believe MNQ did the same thing, and both of them look amazing. Yeah, same idea. I got the level up there. And let's bring in this. This is your support, approximately. And zoom in. You have a consolidation. getting lower highs in that consolidation, a bit of a false breakout. And then the real breakout happened, and here you go. So you could put the order in out and possibly put it here at the support, at the previous support, and to there. And looking at the footprint charts up in this area, I'd find where the big seller was. Just put the order, the stop loss right above that. And then the target is, yeah, this whole zone, this choppy zone, probably down here. And still went from there. Look at that. So I missed out on these two. Should have put the limit orders in. Yeah. Still got two to work. Since then, though, yeah, tricky. Oh, you want to see something? Want to see something funny? I was playing with this yesterday, I think, here. Where is it? Built-in patterns. There we go. Oh man, this is nuts. And here, firstly, TradingView is known to be one of the best platforms out there as far as helping people trade, execute charting. And so you expect it to have a ton of data about finding chart patterns, technical stuff, all that, right? So there's this setting here where it just highlights chart patterns. It identifies and highlights chart patterns. All right, let's put that on. Look at this. It's identifying a wedge. It's identifying a triangle. It's giving you targets. And my goodness, I was playing with this yesterday, and it was such a disaster. I was just looking at it for a little while and realized, oh man, I can identify patterns better than this thing can. I mean, this is a confusion. Okay, you can remove some of them, but you got a triangle, you got a falling wedge. Looks like it's got a triple bottom set up in here. Where is it? All patterns there. To click through them. The triple bottom set up, and it's telling you if you're catching this triple bottom, there's second bottom and the third. The first one's for that one. The target's up there. Man, I really just looked at this for about 10 minutes yesterday through various tickers, and it was wrong 90% of the time. It was just a mess. Because what's interesting is this is a big trigger for people. You see something like this, and you have this thing that pops up on your screen saying, this is a target. So wherever the price is right now, you're just getting long. You're putting your stop, I don't know, wherever. Probably at the bottom of these patterns. Most of the time, it doesn't get there. If your stop's that wide, you probably survive and just eventually get stopped out. Please don't play with these things. And again, I figured TradingView would have this stuff well sorted, right? But no, it doesn't. So I don't know if you guys have experience with this pattern recognition stuff. This is not something I like to play with. I mean, I played with it, so I'm letting you know that. It's not a lot of fun. I mean, how much easier is this? Consolidation, breakout, retest.
Is it not working on time rather than ticks?
I looked at it on both, yeah. I played with it for a while on different setups, different charts, different tickers, even looked at the Max 7 stuff.
And not even the higher time frames and
Don't get suckered into this. Don't. This is a very good selling point for TradingView. Easy, people don't have to think about learning patterns and how patterns work, what they are, why you should have them at key levels. And this is just easy. Oh, look, it just tells me when there's a pattern and when there's a target. Okay, I'll buy the subscription. Next thing you know, all you have is a subscription, which you can't afford anymore because you just blew up an account. Please don't. I think it's a mess. And just like most things in the trading world, mostly it's just garbage.
It's harmonics.
Harmonics, that we said?
Yeah.
All right.
Where it sets up patterns.
Yeah. I don't even know how. Yeah. It doesn't make sense. Honestly, it doesn't make sense. What makes sense is buyers and sellers, right? Buyers buy, sellers sell. One party takes over from the other, and that's it. And if they're in balance, it's called consolidation. It's called chop. It's called no room to lift. That's it. Everything else just is not 80-20. Too much effort, no reward. So, and just like that, I mean, there are a million indicators here. You guys know about this, right? Just over here, find all kinds of things. It's technical stuff and picks. People come up with whatever they want to. You can play with all this all you want. But if you're going to spend an hour going down that rabbit hole, I suggest you spend an hour looking at footprint charts. Just do that. Actually spend 15 minutes looking at it with the perspective of buyers and sellers. Where are the buyers? Where are the sellers? And then who's in charge? Who's taking charge? And now here's the confirmation. How do we know this is confirmation? Just ask these questions to yourself and then start looking at these charts. Those answers will just pop out. 15 minutes, man. That's all it takes. And then practice it for a couple of weeks. It's not very difficult. What else we got? Russell, did we look at this earlier? Oof, this is a mess. I gotta update these levels. Another great big mess here. Dow Jones. Look at that, slammed into a level, but a great big mess. That's interesting. Look at it right here. So the Dow Jones futures, it came into a downtrend. You have this consolidation right here, and you have a breakout. And I didn't see a retest, but slammed into a bigger picture level. So I'm not interested. Again, I want these consolidations to happen at approximately at a level. So this is close enough to a level, but then there's no boom to the next level. So even if it comes back and retests it, where are you going to go with it? Gotta have room for this thing to move. Now it's in a consolidation here, right? And if you have a breakout to the downside, wait for the retest and identify the next level down. I would put, this makes sense to me, right about there. See where it bounced, and there was a bit of a chop zone here. I'll spray through and then go. This area makes sense. That's the next level I have. If all that happens. And when that all happens, then you got to identify, are you getting good RVO? The size of these candlesticks right now, it doesn't look like it. Very hard to see a 20-to-1 sort of setup here, right? 5-to-1 is, I think, possible. Oh well, good fun. I haven't taken the time to look at these commodities futures very much. I'm not really that bothered. I think there's so much opportunity in just all these, which I should narrow down already. Probably just to the main indices and gold and oil. Silver is interesting, but not many opportunities there. I think that's all you really need in any market. All right, what else is on your mind, guys? Got nothing to talk about. This will end up being happy hour, but it's only Wednesday, so we can't do that. That's not allowed.
Why not?
You just want to get me drunk all the time, huh? Oh, no.
Advantage for me.
I better run and hide. These trading rooms are very dangerous environments.
Yeah, drunk day was yesterday.
Yeah, St. Patty's and all that. It just doesn't appeal to me anymore, man. It did maybe 20 years ago, 15 years ago.
Yeah, it's over for me too.
Yeah. Don't need to go hurt myself. All right, let's get this recording sorted out.